Welcome to Yahoo Finance Live. I'm Shauna Smith along with Akiko Fujita. Let's get you up to speed on the market action. Just about an hour to go in the trading day. Right now, you're looking at gains, some slight gains here in the final 60 minutes of trading. The Dow back in positive territory. S&P up about 0.3%. The Nasdaq leading the way. Some of those larger tech names, Apple, Amazon, Microsoft, among the winners in today's action. We're seeing that reflected in the Nasdaq today. Technology, one of the outperformers. Consumer discretionary, healthcare, also trending to the upside. Bond yields are also moving higher on the heels of the hawkish comments that we got from Fed Chair Jay Powell earlier today. Well, Fed Chair Jay Powell in front of lawmakers again, this time testifying before the Senate Banking Committee after addressing the House Financial Services Committee yesterday. The testimony comes a week after the Fed paused its rate hike campaign, but Powell does remain hawkish, saying that we have a long way to go to tame inflation. For on this, we want to bring in Kevin Flanagan. He's Wisdom Tree head of fixed income strategy. It's great to see you here. So once again, Powell taking a hawkish stance, saying that the Fed might need to raise rates 2 more times in order to get a better handle on inflation. What do you think is necessary?
You know, it's really perplexing a little bit. We just had the Fed meeting a week ago. And, you know, here the chairman is talking about we may need 2 more rate hikes. And I kind of scratch my head. It's like, well, if you're thinking in that direction, is one pause really going to do much of anything to change your mind? Why not give us the rate hike last week, give us one in July, and be done with it? So it's kind of interesting messaging that we're getting from the chairman right now. I think what he's trying to do is just completely drive out of the market that rate cuts are coming anytime soon.
With that said, we did have Atlanta Fed President Raphael Bostok on Yahoo Finance yesterday, who talked about that lag factor. He's especially concerned about saying it could be up to 24 months until we see the full impact of this tightening cycle so far. How concerned are you about that?
Well, I mean, it's Volcker-esque, right? If you want to use the term, 500 basis points since March of last year. And something else that Powell has been talking about and maybe spooking him a little bit as well, even though he spoke quite hawkishly yesterday and today, is the tightening in credit conditions from the regional banking turmoil we've had, that is an ongoing process as well. So that's why I kind of get back to the notion of being a little perplexed. It's like, okay, if you're going to pause, then pause. Don't talk about appropriate for 2 more rate hikes this year. It's one or the other at this stage of the game. Really what it does is, I think, just send a mixed message to the markets.
Kevin, we have seen the labor market be very resilient up until this point. There are slowly starting to see some signs of the labor market cracking. Though, if we do see the Fed raise rates even higher from here, what does that mean for the labor market? And I guess, how are we still able, do you still think we'll be able to avoid a recession?
It's a great question, right? It's the recession we're all waiting for. And 6 months into the year, it's yet to occur. I mean, go back last year when we had the quote unquote textbook recession, but everybody said, no, look at gross domestic income, a different gauge for economic activity. And it's flip-flop. That's now negative while GDP is positive. But I think, you know, what's important to ask the question, maybe the Fed needs to ask themselves the question, is 1 or 2 more quarter point rate hikes really going to do it? I mean, you've already done 500 up to now. Is 1 more 25 or 1 more 50 basis point move going to be the thing that pushes the needle finally? I do think what you have done, however, is pushed out the timing of a recession, that if you were expecting one by now or third quarter, perhaps it's being pushed more into Q4 or a 2024 development.
Abroad, we did see the Bank of England today, as well as the Norges Bank, the Swiss National Bank, and then even Turkey today raised rates. I mean, that seems to indicate just how sticky inflation is globally. Does that, if you sort of flip the conversation here, does that in some ways show that the Fed is in fact leading the pack in tackling inflation?
Well, yeah, you know, I mean, I think they had been leading the pack up to now, and a lot of the central banks are playing catch up. And that's the question, is where do they lead from here? Is it the pause, or do they still have a couple more rate hikes up their sleeve? Do they pull a Bank of Canada, right, who that raised rates earlier this year, took a few meetings off, and then raised rates again? So we're data dependent, meeting to meeting, right? That's kind of the jargon we're hearing from the Fed, from Powell. And in that environment, what that does It just increases or maintains an elevated volatility quotient, especially for the bond market, because to your point before, with each jobless claims number, each monthly employment report, we're going to be responding in the context of, well, does this mean a Fed rate hike or is this the real pause?
Kevin, how should investors, though, be looking at the fact that central banks around the world remain so committed to getting inflation under control? When you take a look at what the Bank of England just did and what's happening right now in the UK, they're far from getting back to that lower inflation target that they want to see. How long could this fight potentially drag out?
Well, I mean, obviously they were behind the curve, tried to catch up, get out in front of it. It takes time. I remember Chairman Greenspan way back in the day used to call looking at inflation measures such as CPI as akin to looking in the rearview mirror. So you wonder, are they fighting the right fight still, or should they, to the point you made before, I think that Bostic was saying, the mechanism, the flow-through mechanism for monetary policy takes time. Now, there's other measures of inflation that aren't showing perhaps inflation coming down more than the official government measures. So that's the unknown. That's the uncertain quotient that we're dealing with at this time.
Let's talk about how people should be positioning themselves in that uncertainty. From a fixed income standpoint, what do you like right now? Is it about treasuries? Is it about corporate credit? I mean, where do you think people should be looking at?
It's kind of twofold. I mean, we're asked oftentimes about duration. We'd rather be late than early to the duration party. I think the yield curve continues to point you in that direction, the historical inversion nature of it. I look to Treasury floating rate notes where you're getting yields, say, in the area of about 5.3, 5.35% with 1 week duration. So it's kind of income without the volatility. And we have seen a return to normalcy where yields in the high yield space are now 8.5%, 9%. So if you're looking for a core plus kind of measure as well, maybe with a quality screen, perhaps there's a place for high yield in your portfolio as well.
Kevin, when it comes to investment grade bonds, is there a place there for that in your portfolio? And I guess when should you start to look to add some of that exposure?
I'm sorry, what kind of bonds did you say?
Investment grade bonds. Is there any, I guess, people who are trying to get more of a defensive type of exposure here, given the fact that there's so much uncertainty, when should they be looking to add?
Well, I mean, spreads have widened out, so you do have some yield advantage over, say, straight treasury coupons for investment grade corporates. And if you do feel that the economy is ultimately headed towards a recession, then perhaps you would rather be in investment grade credit than, say, sub investment grade credit. But, considering we're still waiting on that recession, labor markets are solid. I think you have enough cushion in the yields in the high yield market to hopefully avoid any kind of pratfalls moving forward.
And in terms of where your allocation should be, are we still sticking to 60-40, or is it a little more geared towards fixed income?
That's a great question. Well, we in-house, we have our models that tend to drift towards 75-25 in this new genre we've had in investing at this stage of the game. But, more and more, I think with income coming back into fixed income, you are seeing flows moving back into the bond market, right? These are some yield levels we haven't seen 15, 16 years, a generation of advisors, of investors that haven't seen before and are waking up to, as I mentioned, 5% in the treasury market, which is quote unquote considered right kind of in the risk-free arena. And it's unusual for a lot of investors. They've not seen these kind of yields before. So we are beginning, I think, to see a different balance approach when we're looking at stocks and bonds.
All right, Kevin Flanagan, Wisdom Tree, head of fixed income strategy. Thanks so much.
Thank you.
And time now to take a look at where the markets are. Once again, we've got Yahoo Finance Jared Blickery with more on the market movers. What are you watching?
We got a mixed bag. Well, we had a mixed bag. Dow has just managed to climb into the positive there by 1 basis point. Nasdaq up 0.8%. I just wanted to continue the conversation on volatility and also get into bonds a little bit, but mainly sticking with equities. Here is the VIX. This is a SIBO volatility index, Wall Street's fear gauge, and we are sitting with a 12 handle. That's 12.95. Haven't seen that since before the pandemic. And here is a chart showing, this is year to date, and here we are at these depressed levels now. And just as a reminder, this tends to move inversely with respect to stocks. So we've got stocks rallying in this wall of worry right now. And not surprisingly, we've got the VIX actually coming down. So here's a 5-year chart, and here's 3 years ago at the beginning of the pandemic when we prior saw these levels. And a lot of times VIX tends to stay in these low volatility regimes for long periods of time. So investors want to think, all right, is this going to be the new norm for the rest of the year? Very difficult to say, but I do want to show one thing, because there is a divergence between the economy and what the stock market is thinking. There usually is, but here's one more way of thinking about it. Here's the VIX going back to 1990. That's the beginning of it, and it's inverted. So usually any spikes that we saw up there, those would be spikes down. Then that's the orange line, and then the blue line is consumer sentiment. This is a reading on the consumer, and right now we are coming off of depressed levels, but you notice that a lot of these orange spikes downwards that meet these lower levels of consumer sentiment. We don't have one right here. In fact, there's a huge gap. So the question is consumer sentiment going to rise to match the lower VIX readings, or is the VIX going to catch down and just kind of quickly catch up to the lower readings, which would mean probably a sell-off in stocks? Too early to tell, but these things usually do get resolved. Also want to talk about bond market volatility. I was talking about depressed levels in the VIX. In the bond market, we have come down off of these highs considerably, and we are sitting at the lows of the year. But you can still see on this 5-year chart, relative to what's happened, still pretty elevated here. And as much as bonds tend to lead stocks, credit tends to lead equities, might be a little bit of a warning sign right there, guys.
Okay, Jared Blickery with the latest on the market action today. We are just getting started here in Yahoo Finance Live. Coming up, Tesla shares higher today despite another downgrade. The details on the other side. Plus, the cost of higher education is soaring, but one university is taking action. We've got much more on that later in the show. And is it time to buy Bud Light stock, even if Americans aren't back to buying Bud Light? We dive into the latest note from Deutsche Bank regarding AB InBev. All that and much more coming up here on Yahoo Finance.
The people know I love a good yacht, and it's been smooth sailing here on Yahoo Finance all week. From Ken Lyons' Festival of Creativity, we've got the conversations with game-changing executives, entertainers, and icons across the business industry, and all of them are coming your way here on Yahoo Finance.
the priorities of today for the entertainment business were our priorities yesterday, right? Like at the beginning stages, we wanted to be an example of the change that we wanted to see. So our infrastructure is one that's full of color, a landscape of inclusion, right? Because that's what it's supposed to be.
Heartbeat, Kevin's the North Star and sort of the heartbeat of the company. We're working with so many amazing creators across audio, TV, film. And, I think what's really exciting about Heartbeat is it serves as the platform that he's created for the next generation of not just comedic creators, but just creators in general.
The power of culture. And that's a big word, everyone uses it, but we set that as our North Star to really become a cultural icon. We're McDonald's, so we shouldn't just be participating in culture, we should be creating it, which means if you're gonna do it externally, that gives you a thought to how you have to build that culture internally. And that's really what's been the driver of the business for the last 2.5 years.
This is one of the most, if not the most, inclusive brand in the planet. For a portion of population today, particularly Gen Z, ESG, your level of commitment on ESG, it matters. And for others, it's innovation. So the name of the game for us is growth.
The biggest concern, I think, for talent, at least Hollywood talent, would be how long does the writer's strike last? How bad is the pullback by the streaming companies in terms of how much they're willing to spend on content? On the other side of the coin, in the music business, where I spend a lot of my time, it's never been better. The live music business is off the charts.
Everybody wants to know, what's the state of that market is. Are things going to come back, storming back? I'd say, look, things are pretty stable. I think that's the sentiment here. People fear a really tough 2023. It's not the fastest growing year ever, but things are pretty stable in the industry. And I think a lot of business is getting done here.
Taking a look at Ford shares moving to the upside up just about 1%. Automaker winning a massive loan from the Department of Energy. Yahoo Finance's Prof Supermanian has the details on that with just over $9 billion. And it's Ford and their battery manufacturing partner, right?
Right, SK, South Korea battery manufacturing company. Yeah, so it's like, we knew these plants were happening, these 3 plants in Kentucky and Tennessee, but we didn't know that they had $9.2 billion in government low interest financing for these projects. Massive loans, the biggest that the LPR loan programs office has ever lent to any manufacturer or any company for that matter. So good for Ford to get that. GM and LG also had a smaller loan, around $3 billion for their battery facility. So it's not unprecedented, but the size and scope is big, and people are asking, is that necessary for Ford, a company that can tap, private markets to raise money? Do they need this much government funding? But Ford would say, this is a big deal. They gave us a statement that said that major tech transitions take time. You need public and private sectors to work together. And the DOE's foresight here will help do the same for transition to zero emission transportation. So that's a big deal. And I think that's why we're seeing that here.
Pras, in many ways, you look at this and you think, well, this sounds sort of similar to what we've seen in other countries like China, where the government gives huge subsidies to really support the local companies. I mean, the EV race, as we've discussed, is a global race. What does that tell you about the resources that are needed to allow for U.S. car makers, especially, to really pull ahead?
So, Kika, Bloomberg did a big piece on this about the sort of history of the LPO and how it was basically dormant for 2012 through the Biden administration. There was no money really going in and out. And that caused a problem because China was able to sort of invest more in the battery ecosystem, battery manufacturing and materials. So they built out a huge lead because of the fact the government actually subsidized a lot of that industry. And I think right now what's happening is the Biden administration says we need to be doing that now. We need to catch up. And that's why they're able to kind of sort of tap those big money, big loans from the IRA and make that happen here with Ford, LG, GM, that sort of thing. And they want to keep doing that going forward.
Let's talk about a leader in the EV space. That is, of course, Tesla. Yesterday, we were talking about a downgrade from Barclays. Today, Morgan Stanley out with a note downgrading the stock as well. I mean, does this really just come down to valuation and just the incredible run-up we have seen in the stock in the last month?
Yeah, you said it right there. I mean, but basically, at least with Adam Jonas here at Morgan Stanley, he downgraded the stock, but then hiked the price target $50 to 250 from 200. So saying that actually there is potential for some more room to run, even though they think the stock is fairly valued because of the fact that there are still some skeptics out there that haven't gone on the Tesla train. But he said, yeah, it's an AI story. Investors sort of have gone a bit too high, too too sort of dreamlike in the sort of AI's picture here, because generative AI is different than the AI that you use for machine learning and Tesla's FSD, which Jonas notes that's the story here, not so much about the other stuff that NVIDIA and companies like that are actually big into. So he says that Tesla is still the best positioned automaker right now in terms of the EV transition, but right now might not be the best time to buy, but watch out because it could actually still keep going up.
Year-to-date gains over 110%. All right, Pras, thanks.
Well, new data is highlighting just how tight the housing market still is. Existing home sales essentially flat in May compared to April, but compared to a year ago, sales were down 20%. Joining us now is National Association of Realtors Chief Economist Lawrence Yun. Lawrence, good to have you back on the show again. I'm looking at inventory levels here for May, at least. They are the lowest dating back to 1999. Is there any relief in sight?
The low inventory is hindering sales potential. And you can see that by the fact that 1/3 of the sold property in the latest month were sold above list price, meaning multiple offers are happening. So the shortage of inventory is not fully satisfying all the buyers in the marketplace. So once we get more inventory, one can easily anticipate a boost to sales. And of course, mortgage rate also is a big important factor in the housing sector.
Lawrence, you mentioned getting more inventory eventually, and that obviously is going to free up some of the availability here for potential home buyers. What does that timeline, though, look like given the fact that we're in this uncertain economic environment and people simply aren't moving from their homes given the lower rates that they locked in over the last 2 years, 3 years?
Eventually it has to be the home builders. They have to build more in line with the population growth and the job growth. Let's remember, the total number of people working today is about 4 million above pre-pandemic levels. So we have far more people, but fewer sales activity because of limited inventory. But the good news regarding the builders is that the latest data is showing single-family home construction housing starts at near 1 million. So we have not seen that level in the 10 years prior to the pandemic. So builders are ramping up, their profits are turning in, and there's a financial incentive to produce more. But it's gonna take time. So in the short-term measure, one of the things that our organization is talking to members of Congress is to say, can we incentivize some of the mom and pop real estate investors to unload, possibly by lowering the capital gains tax temporarily, so we can immediately bring more inventory to the market so that first-time buyers who have been struggling, maybe they get more choices.
Yeah, well, what's the prospect of that? I mean, what kind of timeline are you looking at the potential for that policy going forward?
We are in the discussion because I think people understand, the country understand, that we need to have a steady ladder towards home ownership. We don't want to have a divided society where homeowners are getting substantial housing wealth, which has been the case in recent years, while the renters just frustrated, like not making any progress in life. So to assure that first-time buyers, who incidentally were below 30% of all purchases, normal level will be closer to 40%. So we want that first-time buyer, younger generation, to taste the home ownership and the wealth that goes along with it. But right now is a very difficult, challenging circumstances. So we have to get the communication started regarding getting more investor inventory onto the market, put a condition to say you only get capital gains tax relief if it's sold to owner-occupant or the first-time buyers, so that it's not an investor-to-investor transaction.
Lawrence, what does all this mean then for prices going forward? Because the fact that there is still this pent-up demand, low inventory, that sort of put a floor on prices. Is that going to continue to be the case here going forward, do you think?
The prices have been roughly stable in terms of the national median price, even though we do see some variation. Upper end market, yes, prices are coming down. And for people looking to buy those expensive homes, there is a better chance for the buyers to get that better price negotiation. but not the case for the mid-price or more affordable price range homes where they're attracting multiple offers. And also out in the West region, we are seeing about 5% reduction in median prices. So there is some variation, but with the mortgage rate possibly stabilizing or possibly even decreasing later in the year, let's hope that the Fed, as they get more incoming data, they see that inflation is much calmer, rents are much calmer, and they don't have to raise interest rate. Well, that's going to be very favorable for mortgage rates, and the buyers will be coming in. The key question is whether we will have sufficient supply.
Lawrence, from a buyer side, who's actually in the market looking? I mean, you'd think that the things that you've highlighted there, whether it is the prices that we've seen, the mortgage rates that have gone up, a lot of first-time homeowners or prospective home buyers have essentially been pushed out.
So the buyers, interestingly, the real estate investors have actually stepped away. So we are finding that small decrease among real estate investors. So these are the people who are buying right now are essentially the homeowners who are exchanging home, either trade up buyers or trade down buyers. And they can do so because they acquire sizable housing wealth over the years. They sell their home, use the proceed as a down payment for their next home purchase. So right now, it's essentially the homeowners exchanging properties. The first-time buyers are struggling, and the real estate investors are beginning to step away from the market.
All right, Lauren June, we have to leave it there. Thanks for joining today.
Thank you.
All right, well, coming up, the auction for Bed Bath & Beyond's assets has a winner, and the winner of that, the stock is soaring today. We'll tell you more about it on the other side.
Merci beaucoup, monsieur. Speaking of serving up, Yahoo Finance has got you covered from Cannes Lions this week. Deal-making conversations here are taking place in the Festival of Creativity, and we're going to have some business rockstar type conversations with the CEOs of companies that are in your home and the CMOs who are making the decisions about the message that gets through to you, the consumer. Catch Yahoo Finance all week long at Cannes Lions. Bonjour, ça va? Well, even though I can't hear your response, what you're going to hear is what some of the CMOs, CEOs, business executives, and leaders who are here at Cannes Lion Festival of Creativity have to say about the current state of cultural relevance and how their companies are meeting the moment of today's society.
Overstock shares getting a boost today after the company won the auction for Bed Bath & Beyond's assets. You're looking at gains of just about 19%. The sale coming nearly 2 months after Bed Bath & Beyond filed for Chapter 11 bankruptcy protection. Here with the details, Yahoo Finance's Josh Schaefer. And Josh, we were waiting to see who some of these bidders would be and who the ultimate winner would be.
Yeah, and you see Overstock won thus far. This still has to get approved in court, we should mention. But what they won is essentially the intellectual property of Bed Bath & Beyond. And the key thing here is that price, $21.5 million. To put that in perspective, Bed Bath & Beyond's market cap for the entire business, not just their intellectual property, but the entire business a decade ago, was $16 billion. And they just sold a large portion of their business, that intellectual property, for $21.5 million. So clearly, obviously, just a massive fall that we've seen at Bed Bath. But a key part of this, too, to understand is this does not mean that Bed Bath stores are going to be open. This does not mean that those retail brick and mortar stores that you could go and see are going to continue to be operating. This was also not including Bye Bye Baby. That will be a separate auction.
Yeah, Bye Bye Baby, I mean, that's a part that we have been talking about so much just in terms of the value there. What could potentially survive out of all of this, or what other retailers would be interested in. What does that bidding process look like? And I guess the interest that it's expected to generate.
It would certainly be a different buyer than Overstock.com, right? When you think about why Overstock.com wanted the intellectual property of Bed Bath & Beyond, it's because they get the customer list, they get that proprietary data on customers, and Overstock.com and Bed Bath & Beyond have a very similar customer base. Obviously, Bye Bye Baby and Overstock.com probably have a little bit different of a customer base. So I think you're going to see some different bidders come in. And like you said, Bye Bye Baby was considered to be a better part of Bed Bath & Beyond's business in the end. So it will probably also go for more money, you would expect. We're expecting that filing to probably come out next week. So it'll definitely be one to watch.
There's certainly a lot of people who used to go to Bye Bye Baby who are very loyal customers. Absolutely. So it makes sense when you talk about the value of it. All right, Josh, thanks.
Well, Bitcoin is enjoying its time in the sun again this week as shares pushed higher amid a flurry of U.S. applications to start ETFs investing in the token's spot market. With more on the latest crypto action, we have Brady Dale, Axios crypto reporter and author of SBF, How the FTX Bankruptcy Unwound Crypto's Very Bad Good Guy. Brady, good to talk to you today. We're going to get to the book in just a bit, but let's talk about the action that we have seen in Bitcoin. It feels like the bulls have come out yet again after what has been sort of, kind of a quiet period, we should say, after the collapse that happened last year with FTX. Is the confidence coming back, you think, within the space?
Well, I mean, 30,000 has kind of been like the base in the bear market, so it's kind of like back to the base again. But there's a certain irony in crypto where like the whole thing started to, blow up the traditional finance system, and yet historically nothing gets crypto people excited like people from the traditional finance system showing interest in it. So that is the primary explanation for this week, but also Bitcoin, if you bought in at the start of the year, has had a good year. It's been going up all year since that first fall, as people move out of altcoins, out of the more speculative parts of the market and move into Bitcoin as something of a safe haven, for crypto believers, obviously, not a safe haven for regular investors.
Brady, though, how big of it, though, do you think it is just in terms of the boost of confidence, maybe for those who have been on the sideline now that more institutions are showing their interest in this or confidence in it? What do you think it's going to do maybe to the conversation 1, 2, 3 years down the line?
Yeah, who knows? I mean, it's really tricky because we have the Washington, particularly the Biden administration, fully attacking crypto, in every possible way that it can, and yet we have a few really big institutions, coming in a variety of different ways. So it just remains to be seen. I don't think we really know anything yet. This is a very volatile market. This is just a week of excitement. That doesn't mean it's going to stay up next week. These things move really fast in this world.
Yeah, I mean, to your point, though, does this hammer home the point that at the end of the day, it is about institutionals increasingly getting in or increasing their exposure to the space that will allow another leg up, at least if we're talking about the big assets like Bitcoin as well as Ether?
Well, I mean, once big institutions get in and stay in for good, that will certainly be a step change for the crypto market. Institutions were playing around a significant amount in the prior bull run, and that's when Bitcoin was around $69,000 a year, and we're still a really long way off of that. So, but in that time, they came in and they were only there to sort of take gains, and as soon as things started to fall, they didn't feel safe and they got out in a big way. We'll know that things are different the next time there's a big run and then there's a fall and some of these big players stick around and don't get scared. They came in last time and that was different. They didn't come in the prior bull run, but then they got scared. This time they're coming in the bear market, so maybe that means they do stick around when things go down again and they don't get scared, but it just remains to be seen.
Brady, what about though the odds of the Bitcoin spot ETFs getting approval, right? Because they've tried
I say
this
no
before.
way in the Biden administration. I say no way in the Biden administration. That's my call. I don't think it'll happen.
Interesting. What do you think needs to change in order for it to happen down the line?
A new
Other
administration.
than the administration.
Yeah, I mean, honestly, it's just this administration has just, at this point, with all the things they've done, they've just made it clear that they're not interested in crypto being a part of the U.S. economy, right? There is nothing that's come out of anything related to the White House that has shown any positive sign in any way. It's a full attack. I can't explain why, but that's the case. So I don't think there's anything anyone can do. I think BlackRock knows this. I think they're just getting their feet wet. They're sort of figuring it out, getting a rejection in, sort of letting the world know they're interested. And then when there's a different administration that's a little more open to it, then they'll really do it. But I mean, I could be wrong, but I don't think we're going to see a Bitcoin ETF with Biden in the White House.
Are we likely to see more of a regulatory clash moving forward, given the SEC's recent actions against Coinbase as well as Binance? Yesterday we had Senator Cynthia Lummis, who's been very supportive of crypto, on saying she's going to reintroduce an improved version of the bill she introduced last year, but really that the SEC's recent actions increases the urgency and the need for additional regulatory action.
Yeah, I mean, I think what's happening in the legislature is interesting. Again, I'm not really holding my breath for anything to get passed. These are very long processes where, coalitions have to be built. And so I do think there is a cadre of the legislature who really wants to do something, but it's going to take time. And the other thing that's making this really hard, in terms of anything really happening, is crypto has frankly become a partisan issue. I mean, this isn't 100% true, but by and large, it's something that a decent number of Republicans like now, and most Democrats don't like, and that is not helpful in terms of getting things to move along. When I started covering this industry, it was just something that some set of younger legislators thought was kind of interesting, and most everyone else thought was weird. It wasn't partisan. But now it's gotten to be pretty partisan, and so that is going to bog things down.
Brady, what do you think is the single biggest driver to Bitcoin in the near term, given the fact that it doesn't sound like we'll be getting any sort of regulation, any sort of approval for a Bitcoin spot ETF anytime soon? So what is that number one thing that potential investors should be watching for?
Well, I do think big players coming in is really powerful. I think the thing that's also being a little bit missed right now in the larger conversation about Bitcoin is, there's been more activity on the Bitcoin network itself this year than ever before, because there's been some weird new technologies built on it. There's now NFTs on Bitcoin. There's other coins on Bitcoin because of this upgrade called Taproot. People have been pretty excited about that. So it shows people are really using the network, and that might be one of the reasons why institutions are just like, okay, this thing's not going away. Let's start even build something for it. But a crucial thing to keep in mind about the stuff that's come out this week is almost all of it is stuff that's built for institutions to institutions. None of these big guns are giving normal people a way to come into it yet. But yet, these folks have tons of money. So if lots of that comes in, that will be good for price long term.
Finally, Brady, I want to get back to your book. It sort of reiterates the title here, because I think it says a lot about how people viewed Sam Bankman-Fried, the FTX bankruptcy unwound crypto's very bad good guy. Yeah. I'm curious what more you learned in the process of writing this book, but more importantly, to what extent is what happened with FTX, specifically SBF at the helm, how much of that was specific to the company? How much of it was a symptom of the space as a whole?
Oh, I think it's all specific to the company. If anything, and I write this in the book, the FTX story is illustration of the fact of Satoshi's point overall. Don't trust, verify. I've created you a technology through which you don't need trusted third parties, and yet everyone wants convenience, and so they use a trusted third party, and it turns out this was a third party you couldn't trust. So it is entirely the fault of SBF and FTX. It's not inherent to crypto.
All right, Brady Dale, Axios crypto reporter, also author of that book, SBF, How the FTX Bankruptcy Unwound Crypto's Very Bad Good Guy. Thanks for joining.
Thanks so much.
Well, earlier today, Diana Frost, Chief Growth Officer for Kraft Heinz North America, sat down with our team over in France, Yahoo Finance's Brian Sazzi and Brad Smith at the Cannes Lions Festival to discuss the state of the consumer. Take a listen.
I'm Brian Sazzi here with Brad Smith at the Cannes Lions Festival of Creativity. And joining us now is Kraft Heinz Chief Growth Officer of North America, Diana Frost. Diana, good to see you.
Great to see you guys. Thanks so much for having me.
I was thinking back with Brad a little while ago. We have not talked to a lot of awards winners here. We talked to Kevin Hart. He won Entertainer of the Year.
Absolutely.
You and your team are an award winner at this event, which I think sets it up for the bigger things that are happening at the company. What did you win for? And what does it say about where Kraft Heinz is at this moment?
Yeah, I just couldn't be prouder of the team. And we've talked a lot about our transformation, and you've been such a great proponent of our transformation and what we're doing to lead the future of food. And future of food comes with connecting with consumers and changing behavior. And that comes with how we're investing in our brands and how we're unleashing creativity throughout all of Kraft Heinz. Last year, we came here with 28 shortlists. We're sitting here today with 83. And a number of wins under our belt from multiple different categories. And so the piece that I see is that's the beginning of the flywheel, to lead the future of food, connect with consumers, and fuel the investment.
What are you exactly winning for? What things are sticking out?
So a couple of things. I would say a lot of the majority of our wins have come from our global brand Heinz. One of the wins in particular was in the print and outdoor category on Heinz ketchup fraud. So one of the things we learned from consumers, this was quite an insight, actually not even consumers, we saw on social media that in restaurants, people were actually filling up Heinz ketchup bottles with the cheaper version.
That ain't right.
That's not right at all. Yeah. So I think one of the things that we saw with that insight and where the campaign came from was, even when it's not Heinz, it has to be Heinz. And so that fuels and actually ties into the global platform of Heinz of it has to be Heinz.
I feel bamboozled, quite personally.
Absolutely, and it was happening
a lot of money
everywhere.
for those experiences.
Yes.
So what we need to know as well is what that sets up for your end of year spend as you look through the marketing budgets broadly that have been cut for many corporations at this point in time. What do winning awards like this do for you, securitizing even more of that spend from the higher ups at the business?
Yeah, I think it does a number of things, and it actually starts with the culture and the people believing in the transformation. Yeah. And we've been talking about that. So I think that it starts there. I think the second piece is that then fuels creativity, which then delivers on business results, which then gives you and fuels more investment. So as you're seeing a number of companies, as you said, cut investment, we're continuing to invest, and we will invest and increase year over year versus last year, almost in the double-digit range.
Where do you prioritize that spend?
To be honest, you pour fuel on the fire. Yeah. And so as we live in a dynamic environment with consumers, we're learning real time which are the channels that are working best on which brands. As you both know, we live and work in 55 categories, 35 brands. There are a number of brands that we will continue to pour fuel on that fire. For year-end, Heinz being one of them with the new global campaign we just launched.
Is mac and cheese still a growth business?
Absolutely.
How so?
If you look at quick with quality, one of the biggest consumer trends that we see now and is going to continue to actually grow over the course of the next 5 years is consumers want the quality with convenience. Mac and cheese plays so well in that. The other place that we saw a resurgence with consumers over the course of COVID is this idea of holistic wellness, which includes comfort food and food for the soul. Mm-hmm. So not only food for the body, but food for the soul. So you actually put those two trends together. We see a great opportunity in mac and cheese now and also in the future.
In the frozen category, Brian and I were getting a little nostalgic because we know how many times we'd go home from school, or even now perhaps too.
Yep.
And we just want to heat something up very quickly. And typically during a consumer spending downturn, or where dollars become a little bit more discretionary, even in the food aisles, consumers lean into frozen. Where have you seen that ring true once again? Where has that benefited some of the brands specifically for?
Absolutely. Well, we were actually just chatting about this before the launch of Frozen Deluxe. So that's something you'll see from us. We've also launched
What's
homemade.
Frozen Deluxe?
Oh, Frozen Deluxe is deluxe mac and cheese.
Deluxe mac and cheese.
Okay. Deluxe mac and cheese.
Right.
Yes. Get out and try that. I think the other one that you may have heard us talk about before is called home bake. Home bake 425/30. So what that is multiple different mains, veggies, and sides that you can put in the oven all at the same time at 425 degrees for 30 minutes. So you think about this idea that we talked about of quick with quality. You cannot sacrifice quality for the convenience. And consumers aren't willing to do that anymore, and we're leading in hard into that trend.
This is still, I think, a mixed economic backdrop. We talked to Walmart's chief marketing officer and got the sense that they're starting to price in more rollbacks or price cuts in the second half of this year. Do you have to market more value-based messaging in your TV advertising, in your social media marketing to connect with consumers that in many respects might be living paycheck to paycheck still?
Yeah, I think it's incredibly important to acknowledge the environment that we're in. And I think when it comes to value, there is value that comes in price and accessibility. We are in 97% of households. And with that comes a responsibility for accessibility. But sometimes that comes in the form of price, but other times that comes in the form of value beyond price. You think about channel pack and the opportunity that that plays for the value with different size packs. You think about how consumers actually look at value, and they're willing to pay more for brands that are better quality. So I think the way we look at it holistically is, yes, value is incredibly important, and we know the times that are happening right now, but there's a number of things within our mix in terms of looking at both value, but value beyond price.
We've discussed a lot at Cannes this year about cultural relevance and how that drives even product marketing, engagement with consumers. How does Kraft approach that?
Yeah, I think similar to a lot of our peers, that we look at it as really understanding what's happening in the market through social listening. We have our in-house agency that we call The Kitchen. And really, that's living and breathing with consumers at the speed of culture. But it's also, how do we drive culture? So I think one of the things that you'll see coming out from Kraft Heinz is, how do we be part of conversations that are already happening, but also how do we play a part in actually driving some of those cultural trends from now into the future. But The Kitchen, the agency, plays a phenomenal role. We have 9 production studios around the globe that we've stood up over the last couple of years to be at the speed of culture, but have that as part of our in-house capability.
As someone working inside the company, Diana, I get the sense that investors don't appreciate the turnaround that is happening at your company. Where are you at, inning-wise, in terms of this turnaround? And what should investors know about Kraft Heinz today compared to 4 years ago?
I think the biggest thing is everything starts with ambition, and we've changed our ambition. Our ambition is to lead the future of food. I think the other piece that has changed significantly is the belief. And the only thing we can do is continue to go on the track that we've been on, and people will follow. It's consistency and consistent results. But that's not going to change, that we're going to continue to throw fuel on the fire, whether it's through marketing, through creativity, through innovation, all the way through the line.
Diana Frost, Kraft Heinz, Chief Growth Officer of North America. Good to see you. Thanks for stopping by Yahoo Finance.
Thanks, guys.
Back to you guys.
Our thanks to Diana Frost there from Kraft Heinz, as well as our very own Brad Smith and Brian Sazi. Well, coming up, a new survey shows just how much money Americans think they will need to comfortably retire. We've got more on the retirement realities when Yahoo Finance returns.
The people know I love a good yacht. And it's been smooth sailing here on Yahoo Finance all week. From Ken Lyons' Festival of Creativity, we've got the conversations with game-changing executives, entertainers, and icons across the business industry, and all of them are coming your way here on Yahoo Finance.
Northwestern Mutual is out with a new survey on how much money Americans think they will need to retire. But there's a pretty large gap between what people think they're going to need versus what they've actually saved. Yahoo Finance's Carrie Hannon joining us now with more. And Carrie, what did we find out from this survey? How big that gap is?
I know, it's pretty interesting and kind of not that surprising. The average American says they need $1.27 million in order to retire comfortably. Now, I'm not sure exactly what they're thinking about with comfortably, but that's the term. That's up a little bit from last year. It kind of jumps around a bit. You know, people in their 50s are looking at 1.56 million, people in their 40s, 1.28. But here's the thing. The average American only has $89,300 set aside right now. Again, that's up slightly, but my goodness, that is a big gap between what their expectation is and the reality today. So that sort of reinforces this idea that people really need to focus on saving, which is super hard to do, especially during inflationary times, but it is really critical when you're thinking this way. The other interesting piece that came out of the study is, you know, people think they're going to live to 100. Right now, we're not that surprised because we've been hearing longevity, but 3 in 10 people say I'm going to live to 100. And they also say they plan to retire at age 65, which is up from age 64. They bumped it up a little bit because they realized they need to work a little bit more and save a little bit more, because I think the realization that there is this gap is starting to occur to people. But consider that, how they're going to finance 3 decades in retirement, because when Northwestern Mutual actually asked people, okay, so what do you want to do in retirement? They're like, oh, I'm thinking about, I'm going to relax. I'm going to travel. I'm going to spend time with friends and family. Very few people said they wanted to continue to work in retirement in any way, nor did they want to start anything entrepreneurial. In fact, they didn't even really want to volunteer that much, which is kind of surprising. But so these are a bit, you know, startling numbers and wake-up calls for people to realize that, hey, that's a cool million plus is a lot to sock away. And it's imperative, the sooner you can start, the better.
So, I mean, that begs the question, what is that first step people should be taking? What can they do to make sure they're more prepared?
Yeah, that's a great question, because what Northwestern Mutual found is that 33% of people that they surveyed have done absolutely nothing to address this situation. And the things that people need to do very clearly are, okay, obviously save more, right? That's important to do. Do a financial plan. I think you can't underestimate how important it is to crunch the numbers, to actually, it's important to dig down and say, how much do I need to spend in retirement? And you know, what's a reasonable amount? And I think once people look at those numbers, actually do that exercise, it gives you a sense of a goal, of what to aim for, and also a bit of security that, yeah, I can do that, and I'm going to have a plan to move forward. Working with a financial advisor can truly help you stay accountable to doing these things and organize this. But before you even do that, there's some great retirement calculators online that people can look at. AARP has a very good one. Fidelity, Vanguard has one. These are all ones that you can run some of these calculations on your own and sort of just jumpstart this whole notion of, what do I need? $1 million plus is a lot of money. How do I get there?
Yeah, much better to start early and be prepared then. Carrie, thanks so much for that.
Thank you.
Breaking news, the U.S. Coast Guard confirming the passengers on board the missing submersible off the coast of Canada have died. Yahoo Finance's Pras Subramanian has more on that, Pras.
Yeah, it seems the worst was confirmed moments ago. The debris field found near the Titanic site was from the Titan submersible. Earlier this hour, Coast Guard Rear Admiral John Mauger had this to say.
The debris field is consistent with a catastrophic implosion of the vessel. Again, while we were prosecuting the search, we had listening devices in the water throughout and did not hear any signs of catastrophic failure from those. And so we're going to continue to investigate or we're going to continue to document the information there and understand, based on all the information we have, the timeline.
OceanGate releasing a statement too, also confirming this, claiming all 5 passengers have been sadly lost, and that these men were true explorers who shared a distinct spirit of adventure and a deep passion for exploring and protecting the world's oceans. Those 5 passengers again were Hamish Harding, Shanzada Dawood and his son Suleiman, Paul-Henri Nargalet, and of course OceanGate CEO Stockton Rush.
Extremely tragic news. All right, Pras, thanks for that update. We'll be right back. And that's the closing bell on Wall Street, ending the day mixed. The Dow closing in negative territory, just barely below the flat line as we shake out the final trades of the day. S&P up about 0.4%. The Nasdaq was the outperformer in the major averages, closing up just about 1%. Technology, one of the outperformers in today's trading action. All right, let's take a look at some of those individual movers. And first up, Tesla shares closing the day up just about 2%. Now the stock getting hit with a downgrade from Morgan Stanley. Adam Jonas lowered his rating to equal weight from overweight, but raised his price target to $250 a share. This marking the second downgrade of Tesla in just 2 days. And Kiko, a lot of it goes back to just the valuation, how far Tesla has climbed at this point, the fact that it's really been one of the winners in this AI rally, and Adam Jonas being one of those analysts that are saying, hey, at least for right now, we're going to stay on the sidelines.
Yeah, I mean, Tesla's been a beneficiary of a lot of positive headlines. We've talked a lot about the partnership they announced on the EV charging with Ford as well as GM. There's also the AI play and the real hopes riding on the robo-taxis as well. But when you look at the share price, it has gone up $80 a share over the last month. I mean, that is just an incredible, incredible run up. So no surprise here in terms of what we heard from Barclays yesterday and then Adam Jonas today. The valuation is certainly much higher. A lot of that really being valued based off of the AI play, despite some of the concerns around its EV model moving forward. Shares of Anheuser-Busch closing the day higher after Deutsche Bank analyst Mitch Collette upgraded Bud Light's parent company from hold to buy and raised its price target from $52 to $60 a share, noting that Bud Light is at the end of the tunnel of its controversy. And Shauna, if we need to remind viewers, it is about the controversy around Bud Light using a transgender influencer. And we've seen, a huge, huge backlash on the back of that. It feels though like analysts are a bit split on when we see the end of this controversy, because remember last week we were talking about another call saying that this could go well beyond July 4th. Hard to say, when this has had so much traction.
Yeah, it's very hard to say. I think a lot of people have been a bit surprised just in terms of how big of a reaction this got, how much sales of Bud Light have really been suffering. They've been off over 20% on a weekly basis for the last 9 weeks in a row when you compare it to a year ago. So it really puts in perspective just what this boycott has done to the business here of Anheuser-Busch, specifically the sales of Bud Light. We have seen that as people have been boycotting Bud Light, they have turned to some of the competitors out there like Miller Lite, like Coors Light, and that, of course, has led some of the analysts out there to take more bullish outlooks on Molson Coors. But again, Deutsche Bank at least saying that they see the light, sounds like, at the end of the tunnel here for this controversy, and they do expect some of these headwinds to begin to fade. All right, let's also take a look at Amazon closing the day higher. JP Morgan reiterating its overweight rating on the stock. The team there bullish on the future growth in Amazon Prime. Loop also reiterating its buy rating, lifting its price target higher here, just around $180 a share. It was up from $140 a share. When it comes to JP Morgan, though, when they reaffirmed their rating, it's all just about Prime and the potential here within advertising and what that could look like for Amazon over the next several months.
Yeah, and we've seen that advertising side of the business for Amazon pick up in terms of growth in a significant way as well. Looking at Loop's note here, though, interesting to point out, they say Amazon's retail segment mix has become much richer with the $50 billion expansion in advertising and then also commissions revenue when you compare it to where things were pre-COVID.
Yeah, Amazon shares closing up just about 4%. All right, well, Amazon and Walmart, two retail titans with a long history of going head-to-head, from e-commerce and groceries to even dipping their toes in the world of healthcare. So where does the rivalry stand today, and what's ahead for the two retail giants? We want to bring in Jason Del Rey. He has a new book out, Winner Sells All, hitting shelves this week. Jason, it's great to see you here. So I think a lot of people are just trying to figure out the situation that we're in right now. Walmart obviously has been struggling to keep up with what Amazon has been doing over the last nearly 3 decades. Where do things stand today, and how are we in this position?
Sure. Thanks for having me. So I think, first of all, Walmart is finally, after a few decades of treating e-commerce largely as sort of a side project, a hobby, if you will, has finally been taking it rather seriously the last 5 to 7 years. And really, the pandemic has helped force them into connecting one advantage they have, their physical stores, with the online capabilities that come with online shopping to offer online pickup from curbside, also delivery from stores. And they're finally, I wouldn't say catching up to Amazon, but showing themselves to be sort of a worthy competitor in the online space.
Yeah, and Walmart has often sort of touted for the online offline model, right? That they have the footprint in place here. It's a different play with Amazon, but you get the sense that with Amazon, at least on the e-commerce side of things have started to kind of not level off because they're still seeing strength in the retail sector, but it's just not at the level that it was during COVID. We have seen some of the layoffs happening. I mean, where do you think their e-commerce play goes from here? How do they continue to dominate in the face of more competition?
Yeah, this is the Amazon of the past year or so is not the Amazon we sort of have known for during the early days of the pandemic and even the prior decade. CEO transition, obviously, layoffs, investment cutbacks. A lot of folks internally would say they needed some more discipline in their investments, but online sales, growth slowing as well. So we see them investing heavily into advertising. I think around the $40 billion business, analysts say more profitable or higher profit margins than even AWS. And so when you visit the site, if you look closely, just about everything feels like it has a sponsored label. Now, they say they can do that in a way that is beneficial for consumers, but long term, I think there is concern about the shopping experience itself. That said, Walmart trying to invest heavily in advertising as well. I was at a recent conference for this industry, the retail media industry, basically advertising on retail sites, and Walmart was a sponsor right alongside Amazon. So both going at this space heavily, robust profit margins, but a questionable experience for shoppers.
What about the brick and mortar play? Obviously, that's an area where Walmart has this massive advantage. Is this something that you think Amazon should focus on or will focus on at all in future, given the fact that they are such a leader in the e-commerce side of it?
I think we saw with the Whole Foods acquisition back in 2017 and some of the build out of Amazon's own stores, many of which have not worked yet. So Amazon bookstores, which were closed down, Amazon fresh grocery stores, which have sort of that expansion has been put on pause. I think they believe they need a physical presence because we forget somewhere around 80% of retail still happens in stores. So Amazon feels like they need that presence, even if it's just for a pickup and drop off offering for merchandise ordered and returned. So they really haven't figured it out, though. Their DNA is online. They think that technology could be a differentiation in stores. That really hasn't proven out yet. But I think they'll keep going at this space, just largely because so much spending still happens there.
Jason, from an investor standpoint, in many ways, Walmart's an easy one to understand because they are all in on retail. Amazon obviously has other arms. AWS is a significant one. But as they try to sort of, focus or refocus the company, I wonder what sense you get in terms of what it is that Amazon wants to be moving forward. Is it about doubling down on the e-commerce side in the face of competition from the likes of Walmart? Or is there enough loyalty built in there that Amazon feels comfortable in taking bigger bets on other businesses?
It's a great question. And I think we really are seeing an inflection point at Amazon where it's still unclear whether this is a company moving from what Jeff Bezos called day one, very innovative, to a day two mature company that is satisfied with sort of slower growth, but bigger profits and less risk taking. I can't imagine Andy Jassy, the CEO, would be satisfied with that, but they're in this weird phase right now. That said, Prime is really sticky. I mean, we'll see what happens with the recent FTC lawsuit having to do with alleged sort of misleading tactics to keep people signed up and then retain them. But Prime is really sticky. Walmart Plus is a competing offering, which is a pretty good offering. They feel like they need to steal some Prime customers. All of that said, I think healthcare is one space where Amazon will continue to be aggressive, Walmart as well. I think it's possible we look back a decade from now and see these two companies making, a pretty profound impact on that space, in addition to all the industries they play in already.
Jason, when it comes to Amazon, lots of talk just about how Walmart's worried about Amazon. Who should Amazon be worried about? Who's some of the smaller players that you think could be a larger competitor to them down the road?
Sure. I think they are absolutely paying attention again to Walmart. They didn't for a long time after it seemed like Walmart was not going to be any sort of rival. Some of the companies that are interesting to me, and I think Amazon pays attention to, Shopify, not a retail company, a technology company, maybe overextending themselves when they tried to get into logistics themselves, had to spin off that operation. But Shopify is a worthy competitor in that they really care about small businesses and medium-sized businesses. So, it'll be interesting to watch that. The one looking out far, I think, is TikTok. I know, Amazon has long tried to go from not just being a place you shop when you know what you want to a place that you might browse. TikTok, with this immersive video experience, has ambitions of breaking into e-commerce in a real way. And it's just a company I'll continue to watch over the next few years to see whether they can, attract interest from folks who want to sort of window shop and, find influence from people they follow, and maybe make some buying decisions based on that.
Yeah, a big part of that, the element of discovery. It'll be interesting to see how that all shakes down. Jason Del Rey, author of Winner Sells All and Tech Business Journalist. Good to talk to you today.
Great. Thanks for having me.
Well, coming up, the cost of higher education is soaring, but one university is taking action. We've got more on that on the other side.
The priorities of today for the entertainment business were our priorities yesterday, right? Like at the beginning stages, we wanted to be an example of the change that we wanted to see. So our infrastructure is one that's full of color, a landscape of inclusion, right? Because that's what it's supposed to be.
Heartbeat, Kevin's the North Star and sort of the heartbeat of the company. We're working with so many amazing creators across audio, TV, film. And, I think what's really exciting about Heartbeat is it serves as a platform that he's created for the next generation of not just comedic creators, but just creators in general.
The power of culture. And that's a big word, everyone uses it, but we set that as our North Star to really become a cultural icon. We're McDonald's, so we shouldn't just be participating in culture, we should be creating it, which means if you're gonna do it externally, that gives you a thought to how you have to build that culture internally. And that's really what's been the driver of the business for the last 2.5 years.
This is one of the most, if not the most, inclusive brand in the planet. For a portion of population today, particularly Gen Z, ESG, your level of commitment on ESG, it matters. And for others, it's innovation. So the name of the game for us is growth.
The biggest concern, I think, for talent, at least Hollywood talent, would be how long does the writer's strike last? How bad is the pullback by the streaming companies in terms of how much they're willing to spend on content? On the other side of the coin, in the music business, where I spend a lot of my time, it's never been better. The live music business is off the charts.
Everybody wants to know, what's the state of that market is. Are things going to come back, storming back? I'd say, look, things are pretty stable. I think that's the sentiment here. People fear a really tough 2023. It's not the fastest growing year ever, but things are pretty stable in the industry. And I think a lot of business is getting done here.
Student loan payments are set to restart this fall, and that means those who haven't had to make payments since the pandemic are about to face a tough reality. The average payment is $400 a month, but one college is putting plans in place to ensure some future students won't face such a high financial hurdle. Duke University is offering full tuition grants for undergraduates from North and South Carolina, but those family income is $150,000 or less. Joining us now is Gary Bennett, Dean of Duke's Trinity College of Arts and Sciences. Dean, good to talk to you today. Why make this move now?
Well, look, we're just very, very eager to help students in North and South Carolina know that Duke can be an affordable option. We know that the process of applying to college and navigating all the challenges with financial aid can be very complex. And we want families to know that Duke is an affordable option and for them to consider us as an option for their students if those students find their fit here.
How many students is this expected to benefit? And what do you expect the interest then to be like from the two Carolinas, from North Carolina and South Carolina, given the fact that an offering like this is hard to come by?
Yeah, well, the largest number of students at Duke are from North Carolina right now, about 340 students. And so we expect that we'll see more applications from North and South Carolina over the next couple of years. And if that happens, it would be a very welcome outcome for us.
The conversation about high tuition costs, just the cost of a college education, has been ongoing, magnified by what's been playing out with the student loan pause. What's your assessment, at least when you talk about your university, about to what extent those high costs are keeping prospective students on the sidelines?
Well, there are many of the 4,000 institutions in the U.S., and each one has a slightly different profile with respect to its costs and its tuition charges. Here at Duke, we are very fortunate to be one of just over 100 institutions in the U.S. that admits students without attention to their financial background. Those things are separate for us. We do admissions in one way, and then we think about how to package students with a sort of an arrangement of financial support. I think the other thing that's important to note for us is that we are one of a few institutions nationally that makes a commitment to meet 100% of our students' demonstrated needs. So, we're providing what we think of as very generous financial aid packages before this plan. The change here that we're making is that we want to be more clear with families in North and South Carolina about our commitment to affordability. Again, we know this can be challenging for families and going through the FAFSA and these all manner of forms and documentation. And we want families at the outset to know that if their students find a fit here and if they're admitted here, that this is an affordable and accessible option.
Is there a way you think to slow what has been a very, very rapid increase in the cost of tuition? We just had it up on the full screen there, more than $85,000 if you were to pay full price. You weren't able to qualify for any of that aid. That's how much you would pay per year, and it's estimated. Is there more that can be done or should be done in order to kind of slow the dramatic increase that we have seen year after year after year?
You know, I'd say every college is a little bit different. I can tell you that here, this is something that we look at very closely each year. We do not increase tuition lightly. And we do our very best to try to contain those costs as much as we possibly can. I'd say that, you know, we and other institutions nationally have very generous supporters who believe that accessibility and affordability are our primary goal. And, you know, I think one of the really important stories here is that, you know, more than 50% of our students receive financial aid of some type. You know, almost a quarter receive full financial aid. And with this plan, we're committed to extending those financial aid offerings so that irrespective of the ticket price of Duke, that we remain affordable to institutions to students from a range of financial backgrounds.
All this comes is there's a lot of uncertainty around the future of higher education. We've seen the warnings from a number of universities who've talked about that enrollment cliff that could be coming with college-age students or potential students or demographics shifting, with enrollment dropping as well. When you think about what lies ahead, how important is affordability to keeping your enrollment numbers steady?
Oh, affordability is absolutely critical, both to keeping enrollment numbers steady, but this is who we are, right? This is a core value for us as an institution. We believe that we provide an undergraduate educational experience that has the potential to be transformative. Look, when you do my job for any amount of time, one of the things that you realize is that very, very quickly is that the ability to access a college education, it can be just completely transformative in the lives of students and their families, and importantly, and in the communities where they reside. I mean, one of the reasons that we are doing this plan is that we know that students from these income backgrounds, they tend to choose colleges that are close to home. And many of these students, when they graduate, will choose to make their homes here in the region. So we think of this as both a commitment to our students and our families, but also to the communities where they live. So, you know, affordability, I think, is a commitment. It certainly will help with enrollment, but this is fundamentally the ability to access a high quality college education is just critically important for I think our entire country.
Gary Bennett, Duke University Dean of Trinity College of Arts and Sciences. Thanks so much.
Thanks for having me.
Well, coming up, a Deutsche Bank analyst upgrading Anheuser-Busch to buy. So is now the time to jump and buy the stock, even though Bud Light sales are still down on a year-over-year basis? We'll discuss next.
I'm Brian Sozzi here on Yahoo Finance Live. Joining me now is the CEO of Brad Smith Inc. Brad Smith. Brad, good to see you here. Cannes Lions Film Festival. Biggest thing you've learned?
Biggest thing that I've learned for Brad Equity Partners to take back to New York City is that, number one, everybody is discussing how they can set their company up for the next leg of growth. We've spoken with Kevin Hart, will.i.am. We've spoken with McDonald's, with Delta. We've got these conversations that are going to blow your mind from here.
The biggest thing I've learned is that everybody here, Brad, is just impeccably dressed, like you, like me, like all the Yahoo Finance users out there on our platform. Brad, it's always a pleasure to see you. Thanks for coming on today.
That's it. Ladies and gents, boys and girls, why do I have these big dead mouse ears on? I'll tell you why. We've got our ears to the ground here in Cannes, France at the Lion Festival of Creativity. Much more coming up on Yahoo Finance.
Welcome back to Yahoo Finance Live. I'm Alexandra Canal, joined here by Josh Schaefer and Praz Subramanian, and we're talking the top stories of the day. Let's kick things off with Vice Media. Now, that is being acquired out of bankruptcy by Fortress Investment Group, along with a consortium of other lenders. Fortress bidding $225 million to take over Vice Media. I think the game plan here is to probably sell it for parts, since Vice is the parent company of some pretty notable brands like Refinery 29, Vice News. But if we think about the digital media space as a whole, it really seems to have been under a ton of turmoil, not just with Vice, but also companies like BuzzFeed and Insider, just declining valuations, layoffs across the board. You have to wonder where this industry can go from here.
I mean, it's immense pressure for these media companies, new media companies that have just basically online only. I mean, Vice, multi-billion-dollar valuation now cut down to $200-something million. The days of Rupert Murdoch touring the Williamsburg offices of Vice are over, and cutting a check for $100 million, that's over. It's really sad what's happening in that space. You mentioned BuzzFeed also going through a lot of changes. They're also public, which is interesting, but you can't really reform or kind of change ownership there. But with Vice, it's just sort of what's next. Hopefully they can kind of keep going. They have a great news operation. I know it's been decimated over the years, but they still make good video content.
I was thinking about what's different with those companies that Ali just mentioned, right? We talk about BuzzFeed, Business Insider, Vice Media. None of them are very subscription focused, right? So I took a look at the New York Times most recent quarter. Their subscription revenue, including digital and the paper, about $400 million. Their ad revenue was only $100 million. So you're talking about 4/5 of their revenue, about 80% of their revenue coming from subscriptions. I think it's interesting to see a lot of these newer media startups sort of going the old internet ad revenue model of let's just bring as many eyeballs as we can and try and sell ads rather than getting subscribers that actually have a core base. And I'm interested to see if some of these companies start shifting to that model of getting subscriptions, right? If you can get digital subscriptions, people pay good money, you can also then get targeted ads, right? You then have a targeted audience. And it seems like that's what some of these companies are missing when you talk about sort of how they're trying to make money, right? And who they're going for. Maybe going more of a subscription model like The Athletic that was acquired by the New York Times and kind of has more of a focused model. So then you have a focused consumer. You could probably sell that for more money per ad as well.
Yeah, well, something needs to happen, right? Because Vice was reportedly on track to miss its full year revenue target by about $100 million. And that complicated a sale at the end of last year, because who wants to buy a company that's going to miss their target by that much? So that's concerning. And then just a pure fall from grace for this company. It had a valuation of just $1.5 billion in December of last year. But in 2017, that valuation was $5.7 billion. So just a lot of money lost in a very short amount of time.
A lot of money lost. We'll stick with that theme. I had my eyes on Bud Light today and Anheuser-Busch as a whole. Actually, a call coming out that people think that it is time to buy Bud Light, guys, and buy Anheuser-Busch. Basically saying, Deutsche Bank coming out and saying that sales have hit as low as they're going to drop. Sales have been falling for over 20% now for 9 straight weeks. Essentially, the take being that Bud Light is actually not, in America, we think of it as the biggest beer, right? Because it was the biggest beer up until last week when Modelo passed it. But Deutsche Bank sort of laying out the case that essentially Bud Light is not actually as big of a business in Anheuser-Busch's overall business as you might think. North American sales, only 30% of all of Anheuser-Busch's sales worldwide process. It seems like maybe Bud Light isn't as big of an issue when you talk about the entire company, right?
Yeah, I know you wrote about this. I'm curious, did the Mulvaney thing sort of accelerated downtrend that was already happening with Bud Light in this country? Not so extreme, but it was already happening that Bud Light was losing sales to begin with. I had no idea how big the Anheuser-Busch footprint was, not only in America, but internationally. Like the Grupo Modelo internationally, also brands like Hoegaarden and Stella Artois here. I mean, just a lot of big beer brands. Do you really need Bud Light? Do you really need Budweiser in this world when you have such growth, high potential in craft brews and also like medium brews?
Ali, I'll feed into you because I'm curious what you think. I mean, anecdotally, that's what I've heard from friends from this whole thing. I think people are, when I go out to a bar now, some people are drinking Bud Light less, but I've heard people say they're drinking like craft beer. Like I was home back in Boston last week and I had friends that never drink Sam Adams telling me about, have you tried Sam Adams beer? And I was like, yes.
No way. In Boston?
Yeah, true experience. Like, I hadn't had this Sam Adams beer, but people not literally Sam Adams Boston Lager, but different brews that they have, and sort of shopping more for beer. And I thought that was interesting, that maybe it's just making people think, oh, I don't always have to drink Bud Light when I go to the bar, because people aren't ordering it for everyone like it used to be.
Right, maybe consumer preferences are changing. We've seen a surge in canned cocktails, right? Seltzers. AB InBev has leaned into the seltzer craze as well. Deutsche Bank did say that stores, they're still stocking their fridges with Bud Light. So if there's a shift in consumer sentiment, if people want to go back to Bud Light, if this is purely just related to the controversy, then that could have a rebound in sales potentially. And I know they released a new ad.
Yeah, they're trying to make that pitch. Let's play the ad right now. I think we have the ad ready.
All
We
right,
can
cool.
take a look at the quick pitch and we'll see if we think it's going to work.
Nice. I love it.
Not good times for the guy that dropped his phone in the lake. But I do think, I don't know, it's fun, right?
I think it was fun. It's summer. You want to grab a beer.
It seems like consensus on the street right now among analysts is they're never going to get back the full. So they're down about 25% on average weekly right now. They're just never going to get back to being even. And that's essentially okay, is what it seems like. And I think that that's sort of the consensus, and that's kind of my take at this point too. I think a lot of people are just experiencing other beers, right? To get that full 25% back from playing an ad that says have a good time and drink Bud Light over the summer, like I don't really think you can fully unwind this, right?
Yeah, I mean, and they have their own, like you said, other canned goods. I also like a good kind of hard seltzer. I think they have the Biv and Wonder or Biz and Wonder. Do you know what it is?
No.
Bev and Wonder.
I'm drinking IPAs, Pross. I'm not drinking hard seltzer.
I do enjoy the hard seltzer. I think it's like my beer replacement. I think that they're just going to replace Bud Light drinking with something else. I don't think it's people who are railing against Dylan Mulvaney are going to rail against the whole entire AB InBev empire. They probably don't even know what AB InBev owns. So we'll see about that. I want to pivot real quickly to pizza. Very good combination with beer.
Right. My favorite topic.
Have you ever wanted to kind of order a pizza directly to your beach chair? Let's say you're out in Long Island. Well, apparently you can with Domino's new functionality. You can drop a pin via Google Maps into the app and say, I want this pizza right here. Now the thing is, the truck will go to where they can most likely go, which is like a parking lot or like a driveway, and then get you there. But that's still pretty cool to be able to order a pizza wherever you're at and just drop a pin and if it's in the location.
So Domino's is integrating Uber Eats into their app in some ways, right? Because you can kind of do that right now.
Can you do Uber Eats like a location?
Can you do it to a beach though? You have to put an address, can't you?
Yeah, but there's an address behind you at the beach, right? As process said, if they're going to pull up to a parking lot, there's always an address near you. I do think it's very cool technology. I'm not trying to fully downplay it. I think it's very interesting, but I do think you're just starting to see more and more of that, right? People just want it directly to them, but also, I mean, innovative by Domino's.
And Domino's, I'm sorry, it's such a tech-focused company. I know people like to say it, but it's actually true. You ever been to Domino's? Like they have this crazy, tech schematic, and they can show like when the next pizza's coming up, how fast it's going to be out, when it's going to come to you. It's really sort of their tech-focused sort of initiative that I think this is the next iteration of.
Yeah, and we were just showing a simulation of the app. You can literally track where your driver is coming from, which I think is great. It lets you know when your order is being prepared, when it's ready, when it gets to you. It alerts you 4 minutes before when you want to go and actually meet the driver to pick it up. Domino's personally got me through all 4 years of college. I'm a huge fan of the crunchy thin crust, plain pizza. If you haven't tried it, I would get it ASAP. So, and like you were saying, this leaning into the technology side of things, right? They're testing robot drivers, making sure your pizza stays warm. There's just so many things that this company is doing to edge out the competitors.
You're right, it is Uber Eats though.
Yeah,
Uber Eats does all that.
But now if you call it AI, your stock will go up. So call it AI and then it'll be good.
Yeah. Okay, well.
All right, well, also, we have to end on a fun one here, guys, because I don't know if you heard, but there is a sort of challenge brewing among the big tech CEOs. Elon Musk, Mark Zuckerberg, in a cage fight. Who you guys got?
I got Zuck. Yeah, 100%.
Zuckerberg.
12 years is a big difference between 39 and
age.
51. 100%. That is a big difference specifically at that age, more than a decade.
You see
I think, and Zuckerberg works out. He does, what is it, Taekwondo or
Jiu-Jitsu. He won a tournament. The guy's like an animal. He's a pure animal. I'm telling you, Musk is Musk is soft.
I know you guys are Zuck fans. I'm going Musk all day. Look at this. The height, 6'2" versus 5'8". I'm not alone here. We're actually
But it's a cage match. It's not boxing.
I know, but there are
Reach
odds
helps
from
in boxing.
both.
If they get on the ground,
The odds are in Musk's
Zuckerberg-
favor right now.
If Zuckerberg gets him in a grapple, it's over, man. It's over.
I love a bet at plus money. I'm taking
And we
Zuck.
should-
I'm
should we
taking
bet on
Zuck
this?
at plus money.
You can totally bet on this. This is something that's a thing. If it happens, I do think it would generate a lot of money. Maybe you could do a charity event or something. But now it's silly. Obviously, these are big tech company CEOs. They're dealing with their own problems at their respective companies. We'll see if this
Probably
turns
speaks
into
to the larger issues going on in tech, right? That they're not very focused on what's going on there, and they're fighting on Twitter.
This is going to be the biggest pay-per-view match, I think, ever, right?
I think it's
Dana
gonna
White
happen.
said that. Dana White said today, the president of UFC, he said that it would be the biggest pay-per-view match ever if they were to fight. And you would think about the amount of non-fighting fans of a giant. It would be pretty fascinating.
Well, we're going to keep debating this, Musk versus Zuck. We'll be right back with Yahoo Finance Live on the other side of this break, including a breakdown of what your 4th of July barbecue is going to cost this year. And spoiler alert, it's a lot more than last year. We'll be right back.
Everyone, you're watching Yahoo Finance. Brad Smith here with Brian Sazi, and we are joined by the one, the only, Dead Mouse. Thank you so much for taking some time here with us today.
Awesome.
We're here at the Cannes Lions Festival of Creativity, and there's a whole lot of creative folks here, but a lot of them look up to you. The significance of a festival like this and being able to be part of not just the entertainers, the business profiles, but having all of them look at Deadmau5 and say, that's a guy we wish we could all be?
I don't know. Yeah, I mean, I'm sure you'd all exchange some moments to be on stage for a minute, but I don't think any of you would trade places on that flight here.
What is getting you excited? your creative juices, as someone who's like watched your career, what is getting you excited about music today?
Honestly, like trying new things, like not even musically. I took up surfing recently, like wake surfing, and that's been fun.
Yeah.
So that's my new hobby. So yeah, like just doing new dumb things, learning new things. Whether it has to do with music or art or not, it just kind of keeps me like sated mentally, I guess.
You think about new things that keep you excited right now, and is one of those things perhaps, of course, a lot of musicians have to be at the cutting edge of technology to know what might be coming in the future?
No, sure. Technology plays a huge role in like kind of moving forward and kind of progressing your sound, if you like. But honestly, music is so rudimentally basic that you don't really need a lot of new technology to do that. Like, I mean, we've been doing that since the turn of the first century with the piano and stuff like that. Yeah. So we're still rocking them. So musical ideas, not so much, but just the DSP, the processing, the sculpting, the sound, those tools are the ones that are always changing. So I like to stay on top of that stuff too.
And so when you hear people talking about things like generative AI, do you think that is going to remove the creativity from music?
No.
Why is that?
It's a tool.
Yeah.
I mean, AI can't even count to 4. So, I mean, it's. I don't know. I'm not really the authority to talk about how AI is impacting this and that and that and the other thing, because I really don't know shit about it. I'm remaining blissfully agnostic to the whole thing, and then we'll see if it either takes over or goes the way of the NFT. I don't know.
We saw. I mean, the pandemic really hit the touring industry hard. I mean, when you're back on the road, are the crowds back? And what are you seeing out there?
Yeah, they're coming back crazy. I mean, it's been a couple of years now, I think, since they declared it over. So yeah, no, it's been cool. The energy kind of came back, had a little spike, and now it's just kind of back to business as usual, and going out and playing events and meeting new people and stuff like that. So it's been pretty cool.
You've got a lot of friends that are out here tonight. You were telling us about one of them, Dave Grohl.
Yeah.
Of course, everybody knows the name Dave Grohl, whether it's drum battles,
the biggest DJ in LA.
Yeah, biggest DJ in LA. Talk about that relationship. I mean, both of you viral in your own sense, brilliant in your own sense.
I'll tell you something
what's that friendship
funny.
like?
It's pretty funny because I used to do this touring circuit with Dave at all these big like kind of rock / EDM festivals when that was coming to fruition, and they would always invariably put me on at the same time as the Foo Fighters. And it would drive Dave crazy because it's like just sound bleed city, right? And me too, right? Because I can hear him trying to play Hero and I'm trying to play Ghost and stuff. And it's like, shut up, Dave. And he said, shut up, Deadmau5. And so we became friends actually through mutual friends a while ago. But then we traveled together for a period in summer of, I think it was like 2016, 17. And it was just the ongoing joke that like we would always be playing together. And lo and behold, tonight, he's playing downwind, about 400 meters away, and I have faith in my PA is going to overcome his tonight, so that should be fun. Well, I'm going to hear about it. I know it.
We're going to pump it that much louder.
Good.
Yeah. When we think about music catalogs right now, there's a lot of talk about how artists are cashing in on some of their music catalogs. Is that something that you've ever had to think about? Have you thought about that?
Well, I don't have to. I don't have to do anything. I don't have to get out of bed, but I do. But it's an interesting thing. I have no opinion of it really. Like, I had a conversation with a quote-unquote rock star who shall not be named, who was like basically telling me his whole big story about how he sold his publishing and he's like, basically the follow-up to the end of his whole big story was, so how much did you sell yours for? And I'm like, well, I didn't. He's like, you're stupid. Why did you do that? You could have done that. And I'm like, well, I don't want to. I don't why? You know, like, and he's like, oh, and it was such a badgering and a beating, but and then that didn't like think maybe, hey, I should do that, but I am focusing on anything this year. It's retaining all my rights back from all these other things. So that's actually just kind of all starting to come together this month, which is like a really cool thing to finally have all ownership of my stuff. Now, what I want to do with it later down the road is fine. Like, I'm only like 42, so like, you know, I got a good bit of time and creativity in me before I need to go out and sell the farm, so to speak. You know what I mean?
It shows that you have good lawyers, and the lawyers are doing their job right, too.
Yeah. I mean, it's the right company.
That's a tip you
right?
could use.
You guys want to buy it? You want to buy my catalog?
Before we let you, I know you're prepping for the Yahoo beach party. What's next in your career?
What?
What's next in your career?
Oh, geez. I don't know. An album, I guess. I got to do another album.
Yeah.
But I got to get some time to do that. So like this summer is probably like just like a little bit of touring, do some Europe run, back in the States, do some of that. Festival season, yeah. And then things kind of tend to cool down after Halloween. And then I'll probably have some time at home to like just kind of do an album.
A lot of people were using that time at home during the pandemic to create new albums, to really dive into their creativity.
I couldn't do
for you.
No, I didn't do anything.
Yeah.
I worked in tech a lot, like that during that whole time.
Yeah.
Like I do software development and game design and stuff like that. So I worked with Unreal Engine for a solid 2 years there, and you know, got ahead with that so that when the next tour comes up, I'm gonna have this new like cool real-time technology I can start implementing into the show and stuff like that. So that'll be fun.
That's awesome. Deadmau5, thank you so much for
you're
taking
welcome.
the time here
Thanks.
with us. We really do appreciate it. Everyone, you've been watching Yahoo Finance here at Canline Festival of Creativity.
Big thanks to Deadmau5 and, of course, to our very own Brian Salzi and Brad Smith. All right, 4th of July barbecues are once again going to cost more this year, unfortunately. Here to break it all down, Yahoo Finance's Brooke DePalma. Brooke, give us the bad news. How much more are we going to be paying?
Just a little bit more than last year. I mean, we heard that inflation when it comes to grocery prices is cooling, but yet again, that July 4th barbecue will cost you a bit more than last year. Let's kick off with the protein. What's hitting the grill this 4th of July? Sirloin steak up about 3%. That's slightly higher, but this big ticket item is only a slight increase compared to last year when inflation rates were 14% year over year. Ground beef also expected to be slightly higher, up less than 1%. Pork chops expected to be higher as well, driven by contracted high-priced corn and soybeans that are actually fed to the pigs that the industry fixed in last year. Chicken breast, I guess you could call that a deal there, down 2% at $4.24 per a pound. But if you're really looking to save this holiday, well, let's deal with what's on the table. Think deviled eggs, think potato salad, think egg salads as well, because that's where you're getting a real steal here. It's down 7% year over year. It's $2.67 for a dozen large grade A eggs. Now that's much lower than last year when prices, much lower than earlier this year rather, when prices were $4.82 for a dozen eggs. Wells Fargo telling us that the avian influenza shock has just about left the stage. So good news for shoppers there. Flour, of course, bread, think hamburger rolls, hot dog buns. That's going to be higher year over year, largely due to the cost of transportation. So think about that driver that's bringing those fresh buns to grocery stores. That's what's driving those prices higher. And when you think about desserts, those are also going to be more expensive because of that. So chocolate chip cookies as well as ice cream is driven higher due to fixed contract rates of butter as well as sugar that the industry set in about 3 months ago when they were gearing up for this 4th of July. And to round down a meal, you got to have a beverage. So taking a closer look at the cost of that, 12-ounce soft drinks are much higher year over year, as well as beer up 8%. Both of those largely driven by the cost of packaging, particularly when it comes to aluminum. So think of those canned beers, think of those canned soft drinks. Those cost more this year, as we've seen many companies take higher prices. That's now starting to settle out year over year.
Brooke, I just feel like you crushed a lot of July 4th plans here. Things are going to be so much more expensive. What's the strategy for shoppers? I mean, do you get the sense that a lot of shoppers might potentially be scaling back on the menu?
Yeah, well, when I spoke to Wells Fargo about this, he said that we're expecting to have big gatherings again this year. That COVID pandemic impact is largely behind us. And so while there's not many Americans who are looking to cut back maybe on inviting more people to their barbecue, there are some key ways to save that Wells Fargo shared with us. He said that if you're really looking to stretch that food dollar here, choose chicken over beef or steak. Of course, maybe some party goers won't be as happy, but it will be more economically friendly for those party hosts. In addition to that, he said instead of aluminum cans, instead of individual packaging, choose perhaps a 2-liter soda over ice for your party goers. In addition to that, wine is actually the most economical choice here. So choose wine over those ready-to-drink cocktails. As we reported many times here at Yahoo Finance, those high noon cans are getting a bit more expensive. And in addition to that, due to those high prices on ice cream, on baked goods, he said, Wells Fargo agricultural economist said choose frozen, non-dairy. So think ice pops. Those will probably make more of a cost-effective option, especially if you're hosting that bigger party yet again.
Oh man, you just made a lot of people pretty unhappy out there. I think a lot of people are probably recalculating what their plans are if they were going to host.
A few less people.
Yeah, a few less people. That's it. All right, Brooke, thanks for that. Well, coming up, we will check in on a few trending tickers after hours. Got that for you. Stick around. Let's take a look at what's trending after hours for you. Two names, Science Applications International and Smith & Wesson. Let's start off with Science Applications International. We're looking at a gain of just about 1%. Now, if you're not familiar with this company, it's a government military contractor primarily. Now, they just reached a $1.3 billion contract from the Treasury Department to provide cloud services. This is going to be for 7 years. They also offer IT and engineering services as well. Year to date, the company's looking at, or stock is looking at losses over the past year, up just about 21%, just shy of its 52-week high. And then let's take a look at Smith & Wesson, the firearm gun manufacturer here. That's stock up just about 2.5%. The company beating on both the top and bottom line. They also authorized a 20% increase to the quarterly dividend. Over the last 3 months, the stock up about 2%. So far, since January 1st, the stock up nearly 30%.
Well, it's closing time here at Yahoo Finance. Here's a look at some of the top stories of the day. The Coast Guard says the missing Titan submersible imploded near the wreckage of the Titanic, killing the pilot and 4 passengers on board. Coast Guard officials say at a news conference on Thursday the debris field that search crews discovered shows the vehicle suffered, in their words, a catastrophic implosion. OceanGate Expeditions, which operated the Titan submersible, released a statement saying these men were true explorers who shared a distinct spirit of adventure and a deep passion for exploring and protecting the world's oceans, while also sending its condolences to the victim's family.
Turning to global central bank action, the Bank of England surprising markets, raising its key benchmark rate more than expected to 5%. That was the 13th straight rate hike from the BOE, and rates are now at the highest level that they've been since 2008. And the Bank of England not alone raising rates, Norway's central bank also raised rates to a 15-year high. Those moves coming as Fed Chair Jay Powell testified on Capitol Hill for a second day, reiterating more rate hikes here in the U.S. are likely coming.
And new data is highlighting just how tight the housing market still is. Existing home sales essentially flat in May compared to April, but compared to a year ago, sales were down 20%. We also got the weekly reading on mortgage rates. The 30-year fixed edging lower for the third week in a row, but still holding above 6%.
All right, well, that does it for us today on Yahoo Finance Live. We'll see you right back here again tomorrow. Have a good night.